All right, good morning, everyone, and welcome to a new edition of Merrill's Market Madness. Today is October 1st, 2024, and so I'm going to be recapping for you a little bit about what is happening in the residential housing market in the Phoenix metro area for the month of September of 2024. I always like to start by just kind of looking at the balance, how many actives versus how many homes recently closed. So right now in our MLS, we have 19,552 active listings. Again, that's for the entire Phoenix metro area extended. 6,850 listings that are currently pending and 5,431 listings that have closed in the past 30 days, giving us a month's supply of inventory of 3.6, which is higher than we have been. Most of the year we've been sitting at a month's supply of inventory in the high twos. By July, we started getting above 3, and now we're kind of, near our high point at 3.6. We've even tapped 4 a couple of times. It all just depends on how many listings have closed over the previous 30-day period. So what we continue to see is rising inventory. Homes are currently coming on the market faster than they're coming off the market. I've mentioned in previous episodes before that if that trend continues for a long period of time, eventually supply will far outweigh demand to the point that home values have to come down. Interestingly, despite all of the the turmoil, the noise, the elections, the wars, all the things that are going on in the world right now, September of 24, the average sales price in September of 2024 ended at $566,000, which is 1.9% higher than it was in September of 23. So average sales prices, again, in the Phoenix metro area from September year over year increased by roughly 2%. Now, obviously, inflation is slightly more than that, closer to 3%. So I guess you could argue that with inflation, maybe home prices have actually come down slightly. But overall, if we look over a 2-year period, if we look at September of 2022, the average sales price then was $532,000, now to $566,000. So that's a $33,000, up. Again, I didn't do the math on that one, but up, almost. I can't do that math in my head, but over the 2-year period, it's up, $33,000, which is, going to be around 5%. Around 5% increase over the previous 2 years. So, home values are still increasing despite the rising levels of inventory. We haven't seen this many active listings on our market since October of 2022. So you'll remember in early 2022, that's when we started to see interest rates get really high and the market really slowed down and inventory started climbing really, really rapidly. We hit a high water mark of active listings in looks like November 5th of 2022, we hit 21,169 active listings. So we're actually almost 2,000 listings below the high water mark of 2022. But what was interesting is that starting that moment, inventory started to fall pretty rapidly until we got to as low as only about 11,000 active listings. So, over the next year. So, and that was in a high interest rate environment, right? I mean, remember 2023, rates were in the 7s, high 6s most of the entire year. So despite the high interest rates, the spring market and the buying season, and then the fact that many homeowners were what we call rate locked, people who want to move but choosing not to because their rates are too good, all those types of things happening. And so inventory just kept on going down, again, despite the high rates. And then again, starting in September of 2023, inventory started to climb again. So roughly about a year ago, we had, roughly only 11,000 active listings. And now we're up to 19,552. So I don't know for sure what, again, we saw a reversal around this time in 2022, but we didn't see that in 2023. In 2023, inventory pretty much continued to rise throughout the holiday season and throughout the spring season. Usually what we see is inventory really falls in the spring season because buyer demand so far outpaces the amount of supply that the number of listings comes down. It's all just a dance between supply and demand. Again, 2023 supply throughout the whole year was higher than demand. Inventory just kept on rising, albeit somewhat slowly. It's been rising more rapidly over the past month or two. And, again, if that trend continues, we may see, we may see home values make an adjustment. But as of right now, they're still up. Now, the one thing that I would say is probably the most interesting statistical, kind of fact about September 2024 is that we saw a significant improvement in mortgage interest rates. The average 30-year fixed rate mortgage right now, and in fact, I'm actually going to share my screen because this is worth, I think this is worth letting you guys see as a visual. Let's see here. I just want to share my whole window. Let's try that. Okay, so this right here is a Freddie Mac's website where it shows rates. And if you come down here right now, it's got a 1-year date range set. The blue line is our 30-year fixed rate mortgage at 6.08%. It's basically our lowest mark in 2 years. So now if you take that and you compare it to, over a 3-year period, we're obviously still on the high side, but basically rates haven't been this consistently low anyway since September of 2022. Right. So roughly a 2-year period where we've had interest rates this low. So the hope had been, let me stop sharing my screen there. The hope had been, hey, if interest rates improve, maybe we'll see a pickup in buyer demand. And so far, we haven't seen that, despite the fact that interest rates are like a whole percentage point better than they have been most of the year. Buyer demand still seems relatively flat compared to where it was when rates were a percentage point higher. So just recapping some of the numbers, let me just kind of go over some of the numbers for September. So in the month of September 2024, we saw 5,432 closings with an average sales price of $566,000. Average days on market was 68 days, and the average sales to list price ratio, meaning how far below the list price on our homes selling, at 97.7%, meaning the buyers are negotiating an average of 2.3% off of the list price. So now what's interesting to me there, that again, the average sales price up almost 2% year over year. That honestly was a little bit surprised. That's where we've been trending most of the year. So that I guess it wouldn't, to call it a surprise is too strong of a word, but interesting to me. But the most interesting piece of data here for me is the units. Only 5,432 closings in the month of September of 24. Now, if we compare that to September of 23, we saw a very similar number, 5,576. So 140 fewer homes sold in September of 24 compared to September of 23. But again, interest rates were much better. Well, let's see what happens in October. Yes, interest rates are much better, but in all fairness, the rates, the homes that closed in September, those buyers put those homes under contract for the most part in August when rates were still higher. So maybe the rate change won't start to show until October, if at all. But again, if we look at 22, now in September of 2022, rates were around 7% by this time. But we were still coming off of a very, very hot market. So in September of 2022, there were 6,461 closings. So this year we saw 1,000 fewer closings than we did then. Now the last normal market, if we want to call it that, pre-COVID, normal interest rate levels, just like a normalish market we often talk about is 2019, right? Before COVID, before all the interest rate wonkiness that we've had over the past 4 years. In September of 2019, we saw 8,024 closings. Again, this year, 5,400. So roughly 2,600 fewer closings happening in September of this year compared to what happened in September of 2019. A significant drop off in the number of homes, the number of units selling. So I thought, okay, well, maybe it's the election. So let's look at the last couple of election years. In September of 2020, now, I really kind of just want to throw this year out because of the September 2020, that was, coming out of COVID. Interest rates were super, super low and the market was really hot despite the election. So we were in September of 2020, 9,634 homes closed. So almost twice as many as what we're seeing right now. But again, let's throw that year out because of the weird interest rate environment. Let's look at September of 2016. So that was the last, normal market election that we had. Even then, we saw 7,436 closings, 2,000 more closings than what we saw in September of this year. So despite the low-ish interest rates that we're currently experiencing, we're still basically at an all-time low in terms of the number of homes that are selling, whether that because maybe because many home buyers continue to be rate locked and are choosing not to move despite the improvement in rates. Perhaps it's all the noise in the world, again, wars and elections and all those types of things that are causing people to say, hey, I'm going to stay put for a little while. My optimistic side wants to hope that rates continue to improve to the point where enough people say, hey, I'm not going to, I've got a 3.5% rate and I didn't want to change that for a 7.5% rate, but I might be willing to trade it for a 5.5% rate. We might start seeing more of those rate locked homeowners start to make more and more moves as rates continue to improve. And also, again, we're in the fall, and that's just normally kind of a little bit of a slower time of year. And obviously, we're seeing a more extreme version of that slowness. So hopefully we see things pick up in the spring. But again, if this trend continues, skyrocketing inventory is rising pretty quickly, combined with extremely low buyer demand. If that continues, at some point, supply will so far outpace demand that home values will come down. Again, interestingly, right now, year over year, values still up 2%. Over the 2-year period, we're up roughly 5%. If we go to 2019, go back to 2019 over a 5-year period, the average sales price was $335,000. We've seen an increase in the average sales price since 2019. I can't do this percentage in my head, but roughly $231,000 increase in the average sales price over the 5-year period since September of 2019. So now obviously we had some very, very low interest rates in that time in a crazy market that caused home values to skyrocket, mostly in 2020, 2021, and early 2022. And then since mid 2022, we're only up roughly 5%, but still seeing an increase. So I'm interested to see, how much longer that continues. Here's what I want to end with. I had the unique opportunity of attending a conference about 2 weeks ago, and one of the main speakers is Dr. Lawrence Yun, who's the chief economist for the National Association of Realtors. Obviously he spent a good amount of time talking about interest rates and the impact that they're having on the housing market. I wish I had it on me, but he was talking about the number of homes that we're going to see sell this year nationally. When we look at the number of homes that are selling nationally across the entire United States for 2024 is at the lowest that it's been at since like the 90s. Except that the population is, significantly larger than it was in the 90s. So just nationally across the board, we're just seeing very few transactions happening. And obviously there are so many people who are waiting for interest rates to improve. There was a lot of talk about how the Fed, of course, has recently lowered the interest rates by 50 basis points. In other words, 0.5%. But that does not mean a direct translation to a 0.5% improvement in mortgage interest rates. Certainly, there's a correlation between the federal funds rate and mortgage rates, but ultimately mortgage rates act a little bit more like, follow the bond market and sort of like stocks, right? When they anticipate something is going to happen, such as we anticipate the Fed is going to be adjusting the rate, then many times mortgage rates will act in advance of that actual happening based on the anticipation. It's a little bit, honestly, it's probably more complex than it's for sure more complex than even I understand, let alone most people. The point is, it's complicated, right? There's lots of variables that affect mortgage interest rates, not just, the federal funds rate. The federal funds rate, not the same thing as mortgage rates. Anyway, Dr. Lawrence Yun said, look, even when the Fed gets their funds rate back to normal, pre-COVID levels, which I believe he said was between somewhere in the neighborhood of 2.5% to 3%, meaning the rate that the federal government will lend money to huge financial bank institution type things. He predicts, eventually we'll hope once inflation gets to where we need it to be, should settle in the 2.5% to 3% range. Even when the federal funds rate gets there, he anticipates mortgage rates are going to settle and stay at around 6%. His belief in that was based on the amount of government spending, the amount of government debt, the government deficit is essentially going to keep the bond market very strong, and that's going to keep mortgage interest rates high. And so the point that I'm really making here is someone who's a lot smarter than me and who does this for a living believes that we're essentially at the low water mark for interest rates, that we're at around 6%, and this is where they're going to stay. And so I don't have a crystal ball. I don't know for sure if that's true, but that's what he was saying. And so, it's worth keeping an eye on. But if you're one of these people who've been waiting for the perfect moment, if you've been waiting for, hey, I'm looking for the best combination of good interest rates, meets the intersection of a market where, buyers have a little bit of an advantage and buyers can actually negotiate and buyers can get, closing costs, or buyers can get money towards buying down their interest rates. This is the most favorable buyer market we have seen in years in the Phoenix metro area right now. You're actually able to negotiate in some cases. I mean, every house is different. We are still seeing some properties that are hot, but for the most part, we very rarely see multiple offers on very many homes out there right now. And we're seeing, many sellers having to reduce their price. Matter of fact, we're even seeing what we call the listing success rate. The number of all the homes that are coming on the market, how many of them are actually selling? We're at around a third of the listings coming on the market are not even selling. They end up canceling or expiring. So as a buyer, if you're a potential buyer and you've been waiting for the right moment, we're again at a place where interest rates are the best we've seen them at in a couple of years. And according to the chief economist of the National Association of Realtors, pretty much the best they're going to get. And a market where buyer demand is at an all-time low, and the motivated sellers out there right now who are really wanting to, find a way to make a deal. Doesn't mean they're going to give their home away, of course, but it is, like I said, the most favorable buyer conditions we've seen in the Phoenix market for many years. So if you've been sitting on the fence waiting for the right moment, I would say now is your time. Anyway, I hope you found this information helpful, and please let me know if you have any questions. Thanks so much and have a great day.